Hey y'all, welcome to Tactical Yield. A different way to bank. Today is January 25th, 2026. It's the first episode of my new channel and just trying to put out there something different, right? When you look at YouTube and all these passive income gurus and everything else, you may have noticed that there's kind of this trend going around about covered call ETFs, about people living off of the brokerages, living out of margin. I think it's something that's actually possible. So with that, being some random Joe, I don't have $100,000 position or some $500,000 or $1 million position. I'm not going to sell you anything, right? I just wanted to cover my journey, try something different, as well as learn some stuff, right? Because here we go, getting into the YouTube content creation fray and everything else, right? But at the end of the day, I got some money. I'm going to try to make more money off of it. I'm going to try to pay off these bills. And if you're not hustling, you're not keeping your mind sharp, then you're going to end up becoming a casualty here in the long run. So with that, this is definitely not financial advice. I'm not a financial advisor, a broker, or an investment professional, or any of that nonsense, right? So make sure you do your own research, but let's get into this, right? So let's take a look at the current fear and greed that's out there in the market. The stock market closed this past week. Today's Sunday, of course, and it's about 52. It's flat. It's right in the middle of the road. Don't know whether to go up, go down. So not bad, but we'll go from there. I'm sure some tariff tantrums and things like that are going to play out here shortly, and we'll feel some of that pain too. But let's take a look at CoinGlass, right? The crypto fear and greed, we're at 26. Once we get into the 25 range, we start getting that extreme fear, and that's actually a good opportunity to make some buys within the crypto space, right? So what are we actually doing here, right? What's your target? My target was try to get to 500 a month. That way I'd be able to pay off some of these bills. It's a good, easy number to get after, right? I could have said 1,000, right? Right there in the middle, you'll see 1,000 a month for 1,200, or I'm sorry, 1,000 a month for 12,000 a year for an annual income, right? What's your target? Right? Are you just trying to get to 100 bucks a month just to see if this thing works out? Trying to get to $1,000 a month for 12,000 a year? Or are you trying to actually quit your 9-to-5 by getting 10,000 a year, or excuse me, 10,000 a month for 120,000 a year? The portfolio I'm going to show you is roughly 13K. My portfolio yields about 24%. The annual income that you're going to see off of some of the snowball analytics charts I'm going to show you is going to show you roughly $4,000 annually based off of this account. And then my monthly income is currently at 328 bucks. So not bad. Trying to get to 500 was my first goal. Not too far off there, right? Currently, we're investing about $1,000 every 2 weeks into this account, and I'm pulling out roughly $400 every 2 weeks to pay off the car insurance, right? So that's the number I'm going after. So my monthly income is about halfway to that point. So here we go. Let's take a look at this. What am I actually doing? I'm taking that bi-weekly paycheck, dropping it into my Robinhood brokerage account, and from that, there's kind of 3 buckets I'm looking at. High yield covered call ETFs or growth ETFs. I've got closed-end funds that you've probably heard plenty about. And then I've got some growth stocks that I'm dropping cash into as well. So with those, you'll see below that, I'm dripping into fiat with those covered call ETFs. The closed-end fund ETFs, those are more, I'm dripping those back into the fund, just letting those continue to grow and build. What that does is it creates a base for my margin. And then the growth stocks, especially, I'm dripping those right back into them because that's the biggest piece for my marginal base there. So going back to the left-hand side there with the high yield covered call ETFs, dripping into fiat, that fiat plus the margin that I'm afforded there with Robinhood allows for me to pay off these bills and these credit cards. Now, why the margin? It allows for a float, as well as if there's ever a buying opportunity, I can dig a little bit into my account and get some good positions there, right? And make sure that these accounts continue to grow over time. Now, getting back into what we got going on with Snowball Analytics here, you'll see my annual income, as I mentioned earlier, is roughly around that $4,000, which is monthly $328. The beauty is, looking at the dividend calendar here, you can actually see when these are all getting paid out and how much is actually paid out over that time frame, right? So the 25th is today, the 26th, I've got Maggie that's going to be paying out tomorrow. That should be $7.32. And then for the rest of the week, I've got 10 bucks here, got 31 there, and roughly 30 bucks there coming into the end of the week. And that's where you see Cornerstone and Hoodie and my SPY hitting. So those will all be great opportunities for me to continue to level up there in this portfolio. Now I want to take a moment and take a look at the following here. So this is a spreadsheet that I put together. And there's a couple things I want to call out here. So in this lower left-hand corner, you're going to see I put in roughly $11,000. I pulled out about $500, and you can see my net in positions a little over 10,000, and I'm at a withdrawal rate of about 4%. Now, how did I get the 10,000? Great question. So over here, I had 3 accounts. I had a SoFi account, I had a Fundrise account, and an Acorns account. The SoFi account, I had been doing some dollar cost averaging for SPY. Literally, I was dropping $1 or $2 a day for an entire year around 2021 or something like that. And oddly enough, that was actually a fantastic play because I dropped about $1,200 and it got me $2,000 in the end with 3 shares of the SPY that I currently hold on to. So I'm up 62% off of that alone. The Fundrise account that I had, that was only annualizing me 3% a year on the return itself. So I was like, why the heck am I even holding on to this? I could definitely put my money somewhere else and make a better yield off of that. And that's what I thought. So ended up liquidating the Fundrise account, bringing it over here to Robinhood. And same thing with Acorns. The problem with Acorns was I was only able to put it into one dedicated stock. And then the rest of it that I have in the fund would have to be some VOO or some grouping of stocks in an ETF or a mutual fund or something. So I had to buy all the other garbage when I wanted to be more focused on things in the growth or the AI sector, because let's face it, that's where we're going, right? So I was like, you know what, I'm done with that. I'm gonna pull that out as well and put it into Robinhood. Why Robinhood? Everybody's wondering, why did I do that? Pretty simple, right? Because whenever I look at Robinhood, my margin with Robinhood right now is at 5%. You can't do that with Fidelity or E-Trade or any of these other accounts without having to ask them like, hey, pretty please, can you take my interest rate or my margin rate of 11 or 12% and reduce it down by a couple points? You'll hear it from some of these other cover call guys. Like their accounts are so big that it's difficult for them to move it out and actually put it somewhere else. So I said, you know what? I'm just gonna put in Robinhood. I'll start with something small and we'll just go from there. So that's why I moved over to Robinhood. I'm also praying that if I say Robinhood enough, that they'll let me get into their new banking or spending account that they got going on. Because right now, to make this thing work, it's a little clunky to live out of my brokerage, not gonna lie. So I'm hoping that they'll, bring me into their fold and hook me up with their new banking setup that they got going on. So it makes it a little bit easier, right? Because I do have this going on at Fidelity as well, using that for some other accounts, but this is the one I wanted to utilize to show the rest of the world what we got going on here at Tactical Yield. So went over the net in and out, but I also want to show you based off the positions themselves, right? So I took all these, bundled them up, and the incomes are my NVII, TSII, WPA, Hoodie, YMAX, Maggie, BTCI, right? So those are all my income accounts. That alone is about a 9K position. And annually, that gets me that 3,800 annually. So the majority of the positions I have are actually weighted in with that income grouping there. My growth position itself is about half of that. And my next steps are to actually continue to grow out the income position itself. I've got some limit orders set in place right now. So if the market does take a dip during these tariff tantrums or whatever we got coming on, I should be able to pull that position up a little bit more, get into some nice positions and make it all happen, right? When you look at it right now, my Hoodie account is the only one that's actually, well, I take that back. Maggie, I just noticed that one is slightly under there. But my Hood account is under by 1.4%. Whenever you take the dividends that I've received as well as my current position itself, right? You got to do the total return here. You got to include those dividends that we're receiving too. But you'll notice my NVII position, right? My NVIDIA from Rex Funds, that's actually up 2.34, which is great. I got some good positions there whenever there were some dips earlier when NVIDIA had its earnings. And then BTCI, I finally got my first payout there. You'll see here, I've got a little column that tells me how many payouts I got. And that sucker is at is up 2.5 based on, but they pay monthly. So that one takes a hot minute before it comes in. But with that, this gives you the base on what we got going on here at Tactical Yield. And all I can ask for is for you to like, comment, or subscribe. Leave me a note, honestly. Drop me something at the bottom. Let me know if there's a covered call ETF you want me to take a look at, or hey, what about these funds? Or what do you think about, I don't know, what? Tell me. Give me something, right? But at the end of the day, I'm going to continue to document this. Don't know what my frequency of videos is going to be at. If it's going to be weekly, monthly, I'm going to try to hit weekly, try to get into that Saturday, Sunday time frame where I could actually drop an update from the entire portfolio and show you what we got going on. But that's what we got. And that's going to be a wrap for episode number 1. Appreciate y'all stopping by.